Hey, nice day here in Charlotte. Clear out my screen. Seems like every time I come outside, the plane is going over. Every time I try to get on live or make a video, or maybe, I don't know, I'm gonna have to check on that. I wanted to pop up on here. Fed raised rates. How you feel about that? Probably not too good, right? Okay, so what does that actually mean for you, just really tactically? That's what we're going to talk about in this video. The Fed raising rates. Now, I told you for some time now that we should expect the rates to be given. And I had a chance to listen to the Fed's meeting with Jerome Powell as he asked some questions. And along the same lines, or pretty much everything he said is really a reiteration or a repeat of all the different things this year. But where you're seeing it hit is probably right in your pocket. So they announced Fed's raise rates yesterday, right? This morning, average purchase interest rate 4.25% if you're 740 and above, 4.50% if you're under 740 credit score. So, give you a little context. Before yesterday, you could get a loan for about 3.75%, 3.85%. And depending on where you are, how you shop it, it could actually went a little bit lower. You got to play with those lenders with those numbers, but you would have been in that ballpark, somewhere in between 3.6 and 3.8, without paying any points. So the Fed's raised rates this morning 4.50%, and I just threw out a lot of numbers, so that's irritating. Suffice it to say, the amount of home you can afford now that impacts your wallet, probably $200 to $300 on the monthly payment. Then, again, we already knew that. So, is it going to get worse? Well, we know that the Fed is going to do this rate hike, or planning to do this rate hike 6 more times. So it will be a total of 7 times this year to go with every meeting that they're doing. Next, it will be, how is that going to help the housing market? Well, we know prices of homes aren't really slowing down in a lot of areas. And the thing about raising rates is you now have to qualify more. In addition to, these rate hikes are actually a tool, a resource to help control the inflation, try to work to build the inflation. And that's the real target, as far as Jerome Powell is concerned, that he is focused on in the economy. Why raise rates now? So from a consumer standpoint, you're looking at gas near $5 a gallon. You're looking at, hey, I'm paying a whole lot more, about $250 for utilities, groceries, everything in my monthly budget. I'm paying more for. So how are we ready to raise rates? Well, we still have a little bit of a supply chain issue. We still have very, very strong numbers in terms of the labor market, meaning for every unemployed person, there's 1.7 jobs. Per Jerome Powell, and I'm going to reference him a lot, so get used to it, this is historic. You've never been in a situation where an unemployed person has there's nearly 2 jobs for every unemployed person. That represents a strong labor market. And because the labor market is so strong, and essentially as these costs go up, what's making it even more strong is more people are encouraged or motivated to get back into the labor pool to be willing to work. Why? Because their costs went up. So they're going to look for more money doing the same job or more money doing a different job. If you've been in the labor market any time over these past 6 months, you know you could probably make more money switching. I've done it. I have colleagues that's done it. That is possible. That's also a unique circumstance of this particular economy, so don't get necessarily used to that. But it is an opportunity for you to take advantage. All that information being said, that is what presents a strong labor market. That helps present a strong economy that can withstand these rate hikes. So, if you know interest rates are going up, we know inflation's up 7.9% as of last month. more jobs are being added to the economy. That's going to be the telltale sign over this next month what's going to happen. Because, again, overnight, mortgage rates went up. But also, the stock market did go up in positive reaction, because up until now, rates had already went up due to the stock. People were already anticipating that companies, the market was already anticipating that the rate was going to be hiked, and then there were forecasts for 6 or 7 rate hikes this year. So they went ahead and priced that in the market so you wouldn't see as much volatility. So the market responded, stock market responded very, very positively to that news, because it follows along that same trajectory. The other thing is the credit card interest rate will go up. But while your credit card interest rate will go up, your savings rate will go up. As far as the savings percentage on your account will go up. So there is some positive. The point of that all being, you do need to prepare and look that things are going to get more expensive if you don't make or look at your particular situation. What can you do? What opportunities do you have? You cannot expect that if you were making $40,000, $50,000 at one job and you can go make 60, 70, whatever the case may be, and you stay at that job and you wrestle with them as much as possible, that it'll be somehow easier for you to necessarily afford. With rates going up, it's going to mean you can afford less home, if home ownership is a thing for you. But even besides that, the average person right now has about $5,600 in debt. With what's going to happen, if you were living paycheck to paycheck, that means more debt will occur, and it's going to be more expensive. So this is what happened in the meeting. We know this. We know the rates will go up. Is it all going to do it no matter what? No, because he did leave in the fact that with the war in Ukraine, don't know the future totally, and with rising pandemic COVID cases in Europe, China now, China was first, and now Europe is having rising cases. We don't necessarily know how that's going to necessarily impact the economy as of yet, but right now the plan is every time the plan meets, the rates will go up. That's the synopsis of the meeting yesterday. Rising costs for, if you have a credit line, anything credit-wise, your rates are going to go up. If you have a savings account or you had cash sitting on the side, you'll probably start to see over these next few months that you'll earn a little bit more interest, meaning pre-pandemic, we were near 2%. Still not going to catch up to inflation, but you're earning more than for that money. It's not burning as bad. How many airplanes is that? Really? Seriously? All right. So that was one. Second thing, that's Fed rate. Second thing, the important announcement I made. Tune in Saturday morning. I think I set the time for it. I want you to be there. I won't take up too much of your time, but very, very important announcement. If you're in the group, want you to be there. Make it a time. Set a reminder. In fact, go hit that event page and like the group or say you're coming, and it'll pop up right for you. Do that. And third thing, number 3, tonight, I have a good colleague coming to speak about being a doula. One of the great opportunities to help and impact in the health area, and also can earn yourself some income. But it's really more of, if you have a heart to help people, how that can help you. Guys, it's truly, truly an honor to bring this information, because it's always helpful when somebody's willing to listen. But it's all to help you move forward. And in this year, I want you to take massive action. So I hope to see you guys tonight. Hope to see you guys Saturday. Oh, and Sunday, have my friends coming to discuss rental. Married, black, and debt-free are going to talk about their journey, how much that they paid off. They paid off amount of debt. They have several rental properties, have a business as well. And while they have a business as well, they still work. Well, at least the wife is still working 9 to 5. So how do they do all that, and how does that translate for their wealth building? I can't wait to see you guys tonight, but also in the next video.